Suburb selection. How can you make sure that you get the art and the science right? In today's episode of the Brisbane Property Podcast, we are going to be covering some of the data points and the information that you can access to ensure that you select the right suburb for your investment opportunity.
Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hello, everyone, and welcome to another episode of the Brisbane Property Podcast with Scott and Melinda Jennison. And today, I think Melinda will probably do a fair bit of talking in this one because we're talking about the science of suburb selection for property investors.
Yes, welcome back, everybody. Can you believe it's already February? I don't even know where January went, but and already we are up to episode 246 here on the Brisbane Property Podcast. We were only reflecting in the office a few days ago about the fact that we've nearly recorded 250 episodes. And if anyone has had the time to go back through all of the episodes that we have recorded, you'll have a wonderful library of information that we've shared that will really help you get ahead if you're buying into the Brisbane property market. But of course, today we are going to try and summarize some of those top tips, the science of suburb selection. When it comes to property investing, it certainly should not be a one-size-fits-all approach. And today we're really going to try and unpack some hints and tips for our listeners to steer you in the right direction. I will say we're not going to give you the secret sauce because that's obviously reserved for our clients, but we're going to give you enough information to help you understand where you need to go to get the information to assist you.
There's a lot of work behind the scenes that we do here at Streamline when we're looking at properties. 246 episodes.
It's a lot. So let's talking with you.
I don't think I'll go back and listen to the first couple because that could be a little bit embarrassing. Hopefully we've improved, and hopefully we share a lot of information with people that helps people and has helped people along the way on the journey to buying property. That's what we're here for, is to help people. So hopefully all the information we've shared in 245 past episodes has been helpful, and people have benefited from that and gone ahead and bought property and helped themselves in it. So it's interesting when we look at science and that type of thing, and we've always talked about a combination. Okay, so I'm probably very heavy on local knowledge and knowing areas, knowing the streets, knowing different streets within suburbs, and or breaking it all down that way, and knowing the areas. You've probably got a lot more data side of things, Melinda, and I think the combination when we work through different types of the way you look and you break down properties, and the data might stack up for something, but then we know the local area and go, yeah, no, that's probably not the street we'd buy in. I think when you overlay the two of them, it's extremely important. But I mean, today we'll jump in a lot of the science behind it as well.
Yeah, we will. So when we talk about suburb selection, what does that actually really mean for property investors? Why is it such a critical step in the investment journey? And I think that's the first real question that we should be tackling today. When it comes to selecting a suburb, you're not buying into an entire nation. You're not buying into an entire city. You are buying into a very local neighbourhood. And we know, based on Brisbane data that we have collected historically over many, many years, that so many different neighbourhoods operate in different ways. Even just reflecting back on the last 10 years of performance here in Brisbane, there are some markets that have outperformed others by almost double. And there is a reason for that when you apply some of these scientific selection criteria. There are reasons that some areas continue to outperform others, and we're going to try and cover some of that today. Before we start, though, I want to actually highlight the real impact on wealth creation of selecting the wrong location. Now, when we at Streamline Property Buyers partner with property investors, we use some software to assist every single client in understanding the type of property that's going to align best with their personal goals and circumstances, as well as their risk appetite. And we'll break that down into yield requirements and capital growth targets. Now, when we look at capital growth, and that's what I'm going to be focused on today, if you are looking for an area that's going to grow in value, there are certain metrics that we believe need to be in place to get the best price pressure long term. Now, if I use a median house value in Brisbane, which right now is around $980,000 for all of Greater Brisbane, and if I purchase a house at $980,000 today, in the next 10 years, if that house grows at a compounding growth rate of 5% per annum, I will have an equity position of $616,000 or thereabouts. Alternatively, if that same $980,000 house grows at a compounding growth rate of 7% per annum, so a difference of 2% per annum in compounding growth over only 10 years, the equity position will go from $616,000 to $947,000 on the same asset. And a lot of the compounding growth rate comes from location selection. Now, if we're actually going to push out that time frame to a 20-year period, the results are even more substantial. At a compounding growth rate of 5% over a 20-year period, our $980,000 property would be in an equity position of $1.6 million 20 years from now. Whereas if we have achieved 7% compounding growth over the next 20 years for that $980,000 property, we have a $2.8 million equity position in that property. This is assuming that we have paid off no debt. So this is assuming that we've not actually paid off any of the debt through repayments. But these results are in stark contrast, and this comes down to location selection and getting that right, because a difference in 2% between 5% and 7% compounding growth over many years can mean a significant difference in your asset value in the future and a significant difference in your ability to create wealth.
A couple of things which I will probably keep jumping back onto is location.
Mm-hmm.
Okay, now I know when you just mentioned median house prices at $980,000, Greater Brisbane.
Yeah.
Okay, we're talking a massive footprint here. Okay, so when we talk about, and I know I talk about this in our market updates when we go through these monthly as well, and I say this is Greater Brisbane because that's where the data comes from. It's not broken down into different areas, different suburbs, different parts of the suburbs. And this is where we get to this location, which we keep talking about all the time, and the difference between the selection of those locations and how that will change. So Greater Brisbane, as we said, median house prices, you'll get different growth area, percentage of growth or capital growth, but it's not broken down into those suburbs when it's reported, obviously, to the general public. And the other thing which I always keep talking about is this long term.
That's
okay?
right.
Making money on property is not a short term thing because there's the cost. Okay, now when we talk about the cost, if you buy a property and you sell the property, you've paid stamp duties, you've paid agents' fees, you're paying out all this money, and it's pretty much it's almost like classed as dead money. Okay, because you're just paying out money if you're transacting through property all the time. Whereas if you buy a really good property in a great location, you don't have to sell it. You can do what Melinda's just talked about, and you let the property do its own work, get that equity, use the equity, and keep growing your portfolio in that type of thing.
Yeah, so I guess the question that we often get asked is that, how do people select location? And a lot of people come to us with an assumed understanding of where they want to buy. And if they're property investors, we spend a lot of time upfront educating them around suburb selection and the science of suburb selection. So it is interesting to get an understanding of why investors sort of overlook the importance of suburb selection. And a lot of investors we find will simply start with budget and then go to realestate.com.au and do a search by filter, what can I buy with this budget? And that's how they come to a determination of where or what they should buy. And I think that that's fraught with danger because there's very little understanding in terms of where they're buying or what they're buying and what that potential long-term performance might look like in that location. And I guess that's the purpose of today's episode, really, to get a better understanding of how you can select a suburb that's more likely to outperform over that 10, 20, or even 30-year period where those results are even more pronounced between, a higher growth location and something that might be, growing at a compounded growth rate just 2% less.
So again, a simple way there. People are buying on budget, not buying on location.
That's right.
Okay, so you don't want to buy on budget. You want to buy on location and then suit the product, obviously, from there.
And of course, budget is a consideration,
Yep.
but if you have a set budget, it's so important to understand, the suburbs that you can potentially invest into with a specific budget and the pros and cons of different locations. And that might eliminate 60 or 70% of those locations that your budget can afford to buy and enable you to focus in on the locations that are more likely to deliver higher growth over the long term.
So when we start to look at data points, so when we're looking at data points for property investors, what sort of things should they analyse? So when they're selecting a suburb, let's give some examples of the types of things that we should be looking at.
Well, one of the things that I always recommend people have an understanding of is the demographic of who lives in a particular location. It's not a surprise to listeners that we talk about this a lot on our podcast. As an investor, you want to know who lives in the suburb that you're investing into. For example, there are some locations in Brisbane where more than 75% of the demographic are property investors. That is people that have invested into that suburb, and therefore more than 75% of the demographic are renters. That to me is a higher risk location because investors are the ones that will typically offload investment properties if there's an economic downturn, if there's a level of uncertainty, if interest rates increase. Now, if we flip that around, and if you're buying into a location where there might be 75% of that demographic in that suburb are owner-occupiers, I can guarantee you the same is not likely to happen in an economic downturn. And in fact, those owner-occupiers are the ones that are more likely to buckle down, stop going on their overseas holidays, or stop actually spending that discretionary money that they otherwise would have spent because they're more focused on holding their home. It's shelter for their family. And this is what we as the Australian population do. So understanding the percentage of owner-occupiers to investors, in my opinion, is one way that you can de-risk the selection of the asset to ensure you're buying in a stable environment that has that continual owner-occupier appeal.
The other thing then on top of that is if you're looking at the owner-occupier that are dominating a suburb, how much do they earn? How much money do those people earn? And this information is all available. Okay, so you can actually look at how much money those people earn in those areas to understand the demographics that live in the area as well.
That's right, because it's not about the affordability of the investor that's buying into the location. We're finding in many areas around Brisbane, there's a lot of Sydney and Melbourne investors, even expat investors that are buying into locations. And of course, those locations are extremely affordable for the property purchaser. However, for the local person who lives in that area, the properties have moved to a point where it is unaffordable. Owner-occupiers in that location can no longer afford to pay what a property investor might be paying for that property. But also, on the flip side, you've got to always consider how much can a tenant afford to pay in rent on a particular property, because when we're looking to invest in property, we're looking for a capital return through capital growth, but we're also looking for a rental return. So if we're buying into a location where we might already find that rents are stretched in terms of affordability, we might not get that long-term growth in rents over time that otherwise might come in a location where people have much higher levels of affordability to continue to pay higher rents in the event there is low supply of rental properties. So affordability, assessing incomes, in my opinion, is also something that needs to be considered when you're actually looking at locations that will outperform over the long term. And this comes down to local demographics once again.
And if there's renters there, obviously there's vacancy rates.
Of course.
Checking out the vacancy rates in the area as well.
Vacancy rates are a great tool that you can get a snapshot view at a suburb or a postcode level of how many properties are available for rent. And that's updated through SQM Research monthly. You can get a snapshot view of how vacancy rates are trending. And if you are buying into a market, you want an understanding of how soon you can expect to find a tenant. Now, nationwide, generally right now, we've got lower vacancy rates. However, we know, based on our knowledge of Brisbane, that there's some areas that have higher or more elevated vacancy rates than others. So if you're buying into an area where vacancy rates might be less than 1%, you can generally expect that you'll find a tenant very quickly. Whereas if vacancy rates are trending above 3%, which this is happening in some locations here in Brisbane, you can expect that either it will take longer to find a tenant, which means that you need to allow for a longer period without rental income coming in, or alternatively, you might find that there's potential downward pressure on rents because there's more supply, meaning there's more rental properties available for tenants to choose from, and therefore you might find that they're offering below the asking price. And this is where we see that supply and demand play out in the rental game, in the rental space.
So what about things like population growth? So when we're looking at certain areas, you'll look at things like population growth, infrastructure development, local employment opportunities, and things like, and obviously they will have an influence then on the investment potential of that suburb.
Look, these are more macro indicators, and we've talked a lot on previous episodes about the importance of understanding what's going on in the economy at large of the area that you're investing into. Our recent episode with Terry Riding from Hotspotting, for example, we talked a lot about the infrastructure development, the economic development, the population growth here in Brisbane and indeed throughout southeast Queensland. These are all things that contribute to the demand for property in a particular location. And these are things that need to be considered at a more macro level to determine that the region or the city that you're buying into has those ongoing demand drivers before you then get down to a suburb level. So I think that they're really important. Investors need to understand at a macro level what's happening in a local economy, because that often filters down to or enables people to start with the city before filtering down to the suburb itself.
Obviously, when we look at, there's a supply and demand,
Yep.
which is obviously pretty simple for people to understand that one. Obviously, we're looking at limited supply and very high demand. Okay, it's going to make it an area that people want. That to me is a very important part to look at when you look at property investing.
That creates price pressure when you've got not a lot to buy or not a lot to rent, and you've got a lot of people wanting to buy or rent that particular product. It creates price pressure, and that's where we see escalating prices, either in house prices, unit prices, or rental income values. Now, how do you look at supply? Obviously, you can look at building approvals, what's being approved, development approvals, what's actually in the pipeline to be approved. You can look at building completions, what's actually coming to the market, because that's an indication of supply. Now, that's long-term supply, and you can generally get that sort of information at a citywide level. When it comes to local supply, you can look at development approvals that are coming through council websites, so looking at local council infrastructure. You can also look at the zoning implications. So, for example, here in Brisbane, we've talked about the fact that previously we've been a very low density city. We saw a change in our city plan in 2014, which resulted in a lot more higher density development coming through the pipeline. But there's still some pockets of Brisbane which have the zoning for higher density development, but that development has not yet happened. So we know at some stage in the future that supply pipeline will continue to escalate. And I think that's critical for investors to also understand. If you're buying in or near an area where there's a lot more supply of the same type of product that you're buying, you can expect a supply surge at some stage in the future, which may impact on that supply and demand balance and cause some price softening or prices to flatten in a market where demand remains unchanged. So definitely assess, the pipeline of new developments and also the ability to create new dwellings, whether high density or low density in terms of single housing. And that's going to be based on land zoning in the location you're buying as well.
And scarcity. Because
Absolutely.
that's what people want. Where it's scarce, that's what's going to drive that as well. The other thing, back on the on-the-ground thing, which I always jump around to, something that we look at when people are looking at property is that demand. So we'll go to opens, you'll go to auctions, how many people are there? If you go to an open home and there's no one there, What's wrong with it? Why aren't there people? Because you need to make sure that there's people that want to buy in that area.
That's right.
One day you'll probably possibly sell it. So you want to make sure it's an area that's desirable, and people do want to buy in that area. So you want the crowds there. That means the property is actually is sought after, and a lot of people are after it.
Brilliant point, Scott. And in fact, I will just reiterate, being on the ground and seeing how many people are turning up to open homes is the best way to see real-time demand as it is happening. And that generally will help us to predict the direction of prices in a particular location. And that can get as specific as suburb or product type. So that's really useful and a great tip for people that are out there doing it themselves.
Some pitfalls and misconceptions, just so we can help people out a little bit on obviously these types of things and how you can look at things. Some of the biggest mistakes investors make when choosing to invest in a suburb.
I think it's just underestimating the importance of that demographic data and understanding who those locals are and whether they can afford to buy or rent the product that you're buying. And then also, you know, what does that look like over the long term? Because there's many areas, more recently with higher interest rates, the wages have not increased at the same rate as interest rates have, or the cost of housing. So therefore, we are seeing more and more areas move into that mortgage stress or even rental stress. People can't afford to pay more to buy on their repayments, and people can't afford to spend more on rent. And these areas are unaffordable for those locals. And yet there's other areas in Brisbane where median values might be well above the Brisbane average as a whole, but they're still affordable for the locals that live there. So affordability, in my opinion, is not relative to the median value of a particular suburb. It's relative to the local demographic and whether their incomes can continue to support higher property prices and higher rents in that local economy.
Yep, demographics, who lives there. Another one, to avoid the being swayed by hype. So when we look at suburbs and marketing campaigns, good ways to avoid that. I mean, obviously the education.
Yeah, listen to podcasts like the Brisbane Property Podcast. I think that's a great way to educate yourself. And there's a lot of information that's out and available for property investors to educate themselves. I think the biggest concern is some of that information is not quality information, and there's a lot of noise, and I think people do need to filter through the fluff, and that can be difficult. But I think the other big tip is don't attend investment seminars where you think you're going to be educated, because it's very rare that you're going to receive information that's personalized to you. But be curious and ask questions, and the more you learn through partnering with other professionals, the more likely you are to get proper professional advice. And I can't underestimate the importance of aligning with a qualified property investment advisor who is certified through the Property Investment Professionals of Australia. You can go to the Property Investment Professionals of Australia website and do a search for who is a qualified property investment advisor, and they are the people that you should be seeking property investment advice from, rather than someone who might have a really slick marketing campaign but lacks the substance in terms of true quality advice.
I think don't rush into things as well when it comes to that sort of information. Don't be in a hurry. Get your education. As Melinda said, listen to podcasts, learn, do some research. Local knowledge is really important, so you really understand what you're investing into as well.
Yeah, look, I think that one of the things we always say is every investor is going to have slightly different goals and requirements, and every investor starts with different circumstances. So when you start property investing, or as you're building out an investment portfolio, your circumstances are very rarely going to be the same as anyone else's. So I think that you need to also take into account what are your circumstances. Some people we know that we partner with when it comes to property investing, they may have spoken to their mortgage broker, and they may require a certain amount of income to satisfy the obtaining of finance for a particular value. Now, that means as professional qualified investment advisors, we're having to understand not only growth targets that they may have, but also any yield or income requirements that the asset must produce for them. And then there's a fine balance between finding an asset that has that growth potential, but also the income requirements to satisfy finance. And this is how intricate it can become when you are selecting a suburb, but not just a suburb, but a property type, because there are different property types that might deliver a different return on investment or a different investment yield. And then it comes down to understanding the balance between the component of land and the asset itself, and how that land to asset ratio will differ depending on the growth and income targets. So hopefully that didn't confuse anyone. It can be quite complex in determining where and what to buy, because it does come down to an individual investor's circumstances.
One size doesn't fit all.
Correct.
I think that's the biggest thing. People need to really understand that you need to have a clear strategy, okay? Because whatever someone else has bought might not suit your individual needs, requirements, your goals.
Yep.
Okay, so you need to make sure you have your own strategy set out. We do at Streamline Property Buyers, we do strategy sessions with all of our investor clients, and we actually set clear goals out. What's your time frame? What are you trying to achieve? What are your goals? What's your risk appetite? All those types of things are taken into account to create an individual brief to be able to actually search from, because different suburbs are going to have different results, and different within different suburbs as well, to break it down even tighter like that. So really having a clear goal to keep to that strategy and purchase in that type of way that we look forward to. Tools and resources. Obviously, there's so many tools and resources out there. Can you just give our listeners a little bit of an idea of some of the things that we look at when we start to look at all this data?
Absolutely. And here's the real value add for those that are still listening to this episode. Here's some resources that are free to access, that anyone can obtain information in relation to property or demographic or suburb related data. So, of course, corelogic.com.au, head to their news or research pages, and you will find a huge amount of valuable information that will help you understand local property markets or regional property markets in detail. proptrack.com.au also has a news and research section where you can go and obtain similar information to what you will find on the CoreLogic website. I cannot underestimate the importance of being able to access ABS data, Australian Bureau of Statistics data. There on that website, you will be able to find lending data. That's going to give us or give you an indication of who is taking out loans. What groups are they? Are they investors, first home buyers, subsequent home buyers, and in which locations? And that's going to give you an understanding at a higher level. What is that demographic breakdown look like in terms of who's buying what? You can also access RBA data. So each month, obviously, the RBA put out a statement in relation to what's happening in the cash rate, and that's going to influence the movement of interest rates. And there's some hugely valuable economic data that comes out in those press releases. With the ABS data as well, the best way to access community information in relation to suburb level demographics is to head on over to the suburb profiles or the quick stats. You can search by postcode or suburb to get an understanding of the breakdown of people who live in a location, how many males and females, whether they're families with children, the average number of children in that location per family, whether they're from Australian descent or are they immigrants in this particular location. What's the average age of people in these locations? How educated are they? What is their income like in relation to other indicators at a state level? So cultural diversity. This sort of information is invaluable, and this is the sort of information that will enable you to get a much better understanding of the local demographics in the area that you're looking to buy. This information is all freely available. It takes a while to trawl through it all, but it's going to give you all of that information that you need to get a better understanding of the asset, or rather the suburb that you're buying into.
I think once you go through all this information, obviously there's the science, which we talk about, and there's also the art. Now, as I talk about, the local knowledge is something that's, to me, is so valuable when you overlay it with information that you have on this type of thing, to see how people live in suburbs. Is it livable? Is it an area that it's desirable and people want to live in there? Are there coffee shops? Are there restaurants? Are there parks nearby? Have you got access to public transport? There's so many things in here. Is the area changing? If it's an older suburb, and we've talked about this again on different podcasts, gentrification, has it changed? Have we moved to the microbrewery, for example, and those types of things, and the barber down the road? There's things that you can actually identify that suburbs are gentrifying and changing and will continue to grow into the future as well.
And of course, some of those things that you've mentioned might not appeal to everyone. So understanding who lives there by accessing that census data and accessing those quick stats will help you understand the local amenity that the dominant population group for that particular suburb might be looking for. Because if you are targeting a location dominated by families with children and the children are all aged under 10, then primary schools might be a really important thing to consider in that particular location. However, if the demographic group predominantly are downsizers, then the local school catchments might mean much less and might be less important when it comes to selecting locations. So therefore, you must consider who lives there and what is that dominant demographic group looking for in that location. That's what the tenants that are moving there will be looking for and paying you rent to live in the property that you're selecting. So you can see how it's a top-down approach. Start with the macro economy, understand the local demographics of the suburb, and then what do those people that live in that local area want within their neighborhood. And that is a sort of neighborhood that you need to be targeting, or that is a sort of property that you need to be targeting that appeals to that dominant demographic group within that suburb. So hopefully that gives you some top-down understanding at a very broad level in terms of how to get to suburb selection.
Quick couple of tips, so some practical advice for investors. A quick couple of tips before we do wrap things up. If someone's starting from scratch, first couple of things they should probably do to narrow down some suburbs.
Oh, look, I think first and foremost for any property investor, it should be understand the strategy. It should never be a one size fits all. What are your growth and yield targets? What do they need to be? What are you trying to achieve? In what time frame are you trying to achieve those results? And what's your risk appetite? These are the big questions that every investor needs to ask. Overlay that with budget. How much can I afford to invest? And that's going to give you the framework to start looking at which locations are going to best suit your needs.
Education.
Yep.
Really important. Obviously, educate yourself, get to know the areas, get to know the data. How often should people reassess?
Yeah, it's a great question. Census data is released every 5 years. So we're really not going to see big shifts in demographic trends until that data is released every 5 years. However, within a monthly or quarterly period, we can see shifts happen in real time when we're out and about on the ground. So my recommendation is that you should be monitoring the markets all the time, because those micro shifts in buyer volume, in buyer demand that you see by being out and about on a weekend, how many people are turning up to open homes for properties available to buy, how many people are turning up to properties that are available for rent, they are real-time indicators of demand that are going to help you understand the immediate shifts in the market. But more so than that, understand the opportunity for long-term gains based on broader macroeconomic conditions in the region you're looking to buy. And if you cover all of those bases, you'll do really well in selecting the right location.
And if people are interstate, international, and they're not familiar with the local market, I mean, local knowledge to me, again, is incredibly important.
Of course, hire professional help, hire professionals that know the local market, that can really fast track that research, because it's what they do on a day-to-day basis. I can't underestimate the importance of partnering with people that know an area so well. And the information that we've discussed today is really the bread and butter of what we do as a business here at Streamline Property Buyers. And we wouldn't have the capability to have a level of understanding of every market across Australia like we know Brisbane. And that's why we specialise only in the market here in Brisbane, to give investors that choose Brisbane as the area that they want to invest, will give them the best asset that their money can buy, knowing everything about Brisbane now, but also into the future.
One other tip I'll give people as well, you look at different suburbs, and when you're assessing suburbs, don't just look what it looks like now. Okay.
Correct.
What's it going to look like in the future? Because you're not going to sell it now. You're going to sell it in the future, or that's what you're looking for, that future growth type of things. What's it going to look like in 5 or 10 years down the track? Because that's how it's going to perform for you as well. So
100%.
look long term and look down the track as well.
Land zoning, regional plans, infrastructure plans, all of that matters when it comes to selecting a great asset.
Fantastic.
That's it.
Well, that's another episode, 246 episodes completed. As usual, as I've said in probably 246 now, I will let Melinda wrap it up as I normally do. It's been great talking. Hopefully that's been good information for our listeners. And until next week, take care and bye for now.
Thank you once again for joining us on the Brisbane Property Podcast. We hope you've enjoyed this episode, and we hope we've provided you with some practical tips and tools and resources that will help to guide you on your suburb selection journey. As always, if you've enjoyed this content, please share with friends and family. We would love for you to leave us a review. Hit that subscribe button on your favourite podcast player or on YouTube, and we will continue to produce great content for you. Until next week, have a good one and bye for now.